Most traders are not losing because they don't know how to trade. They're losing because they don't know how to manage the risk. They don't know how to do proper risk management and have consistent results over time. Most traders I talk to tend to do really well for a week, 2 weeks even, and then one day blows up their whole account. The issue is they don't know how to manage risk. So in today's video, we're going to be talking about how I personally manage risk, how you should manage risk both on prop firms and live accounts, and I'll give you some overall rules that you should follow. Now do understand that risk management will be dependent on your size account. If you're on a futures prop firm, forex prop firm, it'll always be a little bit of tweaks, but overall the ideas will be the same. Also, doesn't matter what strategy you trade, there's one thing common with everything from hedge funds to the guy that's trading a $10,000 forex prop firm account is risk management. Doesn't matter what strategy you're using, ICT, indicators, penny stocks, futures, options trading, you're gonna need some form of risk management. So we'll talk about that in today's video. And I wanna start the video by giving you the number one rule that every trader should have. The number one rule as a trader is you are a risk manager first. You're a risk manager. You're not in this. You're not in trading to make money. You're in trading to make sure you don't blow up your accounts first. You don't blow up your accounts, you trade well, you follow your setups, you manage your risk properly, guess what? This leads you straight to the money. These will lead you to the money. So remember this. Anytime you look for a trade, you're a risk manager first. Now, before we talk about the sizing in and those type of risk management, we have to talk about that as soon as you enter any trade, you have to have a stop loss in mind. So, quick example, if this is a chart here and this is roughly the $20 price and this is $25 price, I have to analyze my chart based on the setup that you look for to find out, okay, where is the exit point? Where is going to be my stop loss? So I know I can be like, okay, well, my stop loss is going to be right here. We'll do this in red. So this right here will be my stop loss. So my stop loss will be here. This is dollar price 19. My entry is a dollar price. We'll say I had an entry right here. My entry right here, a dollar price 22. So there's a $3 difference here. This $3 difference you have to know before you get into the trade that you're gonna have a $3 stop loss. If you get into a trade and you're like, I don't know where my stop loss is, guess what? You can't manage your risk. It's really hard to manage your risk because then you don't know when you should exit. You don't know going into it how much you could potentially lose. Right? Because then if your target here is 25, let's say my PT here becomes this 25 number here, then I know this is a 1 hour trade. I'm risking $3 to make $3, which is fine. If that fits the way you trade, if that fits your system, this is fine to have something like this. But you need to do that work before you enter the trade. You don't enter a trade and then you try to figure this out. Because before you enter, you will know overall how much you're risking. You can say, hey, I'm risking about $1,000 on this trade. And am I comfortable with that? Does that fit my overall trading plan of risking to do 5% of my account? If the answer is yes, then it's a valid trade. Now, when we talk about futures, a lot of people are like, hey, because know mostly I trade futures, you're like, hey, Antonio, do you have a 20-point stop loss? Do you have a 25-point stop loss? Do you have a 30-point stop loss? The truth is, the points on your stop loss doesn't matter as much as you think. A lot of people get really hung up like, I should have an 8-point stop loss, a 10-point stop loss, 20-point stop loss. That doesn't matter. What really matters is where is your stop loss placement, and then you work it backwards. You're like, hey, I need a 40-point stop loss for this trade because I'm targeting 100 points. As long as you know it's 40 points, you can risk the same. I can take a 40-point stop loss. Let's say I have a stop loss with 40 points here. I'll change my color of my marker. have a 40-point stop loss or a 20-point stop loss, or we'll do the third one in red, or a 10-point stop loss. All this don't matter. All this don't matter. What really matters is that you keep the size of this all the same. With all these different points of stop losses, I can just set in differently. Like a 10-point, I can set in 2-3 minis because I know I'm gonna be getting out really quickly. With 20 points, I set in 1 mini. With 40 points, I set in 5 micros. So you can keep all this, you can trade all this. You just have to have a dollar amount that you're looking to lose if the trade goes against you. So if it's $500, you would just have to work your way around that. So if it's $20 per point, every 10 points is gonna be $200. So here you can set in with 2 and you would have a $400 loss. Here you can set in with 1 and you would have a 400-point loss. Here you can set in with half. 0.5 of a mini, which will be 5 micros. So you keep roughly around the same stop loss. Now this is what really matters. So if your first question is like, Antonio, tell me how many points I should keep as a stop loss, and I know it's a question a lot of people have because I get that question asked all the time. The points don't matter. Look at the trade you're taking. Look where you should have your proper stop loss of where the trade will be invalid at that point, and then figure out how much you should be sizing in. And this is really important, not just for this, but some days, and if you've been trading futures for some time, or you're just trading, whatever you've been trading, options, stocks, some days are more volatile than others. Some days we'll get a candle, you'll get a candle that looks like this, and this candle is 10 points. But in some other days, the same exact candle could be moving 40 points. And this is volatility into the markets. When we have high impact news, when markets have been more volatile, if you remember we were trading earlier into the summer when there was all the tariff stocks and those sort of things, with a huge day, the Nasdaq went up 13%. Those candles, every 1 minute candle is moving 100 points. Now, if you're not paying attention to that, you're not doing that math, you're sizing everything the same, you're getting crushed really, really fast. And remember, you don't want to be doing that. Now that we established what your role should be as a trader and how to really look at risk and which way to look at risk, now we can talk about some rules and how much percent we should be risking per account. So first we'll talk about some prop firm accounts and then we'll get into some live accounts as well. And again, this can apply, doesn't really matter what you're trading, this can apply for just about anything. Now, if you're trading a futures prop firm, which a lot of people I'm sure are trading futures prop firm watching this video, you more than likely will have a 3 to 4% stop loss before you lose that account, and depending on the prop firm that you're trading. Now, for the challenge phase, I would typically be risking per trade around 1.5%. So 1.5% to 1%, it depends on the setup, it depends how good of a quality setup it is. And yes, this seems aggressive, but you also have to keep in mind when you're in the challenge phase, especially as a trader that's gotten payouts, that is profitable, it's not a first rodeo. You are every day that you're not making money on a funded, it's a day of money that you lost. Like, so that will give me about 2 to 3 trades that if I lose, I would have to reset the challenge. Now, for my risk to reward, I'll be looking to get double this. I'll look to 2%, or I will look to get 1.5% RR. So percent R's here. So it means I'm going to be passing in just about 2 trades. I want to get funded as soon as possible. Now, if you're a new trader and you're like, hey, like I want to take my time with challenge phase because I'm starting out, you will risk this back down. So if you're a new trader, you will risk 0.5% per trade. So getting to that 3% goal, it would take you about, 6 trades. And on the 4, it would take you about 8 trades. Now, when we enter the funded stage, this changes pretty drastically. I'm gonna be taking a lot different than on the challenge phase. Again, it's funded. Now the money I make actually matters. The money I'm gonna be making, I can actually take it out, right? I can take it out. So on the funded stage, I would turn it back, funded, and I'd be risking around 0.25 to 0.5. So that's gonna be my risk, 0.25 to 0.5%. Again, looking for my RR to be around 1.5 R. So 1.5 R or better. So 1.5 R or better is what I'm gonna be looking for. So if I make, let's say if I make 0.25, I will get in return about 0.6 to 0.7% of the account. If I'm risking about 0.5, I'll be looking to get around 1 to 1.25% of that account. So then if I have rules like I need 5 minimum trading days, with this system, with this risk management system, if I'm profitable, if I'm green all 5 days, I would be eligible for payout. Now, when it gets to the payout, and a lot of people ask this question as well, and I had this conversation with my mentorship students that I work with closely one-on-one, the link for that will be down below if you're interested to work with me one-on-one and trying to scale to $10,000 a month within the next 90 days. What I tell them is when you get to the payout, guys, a lot of people are like, hey, how much buffer should I keep? How much should I not? My philosophy has always been, if the money is there, take your money. Guys, prop firm accounts are not meant to be held long-term. They're not a live account. You only get 3 to 4%. You get sent to live. There's things that can go wrong. You can clap them. They're not there for you to be long-term, just holding this prop firm account for a year, and the stats back me up. There's a bunch of stats, a bunch of prop firms that come out and say that mostly they 1 to 2 payouts are the average of what people get on these accounts. So take as much as you can, as much as possible. That's always my philosophy. A lot of people like have to build a buffer. They build a buffer, but then end up still losing the account eventually. And now that $10,000 buffer that they had, they went on 2, 3 red days in a row. It's down to 2,000, and then they lose the accounts, and now it's $10,000 of unrealized payouts they could have gotten. And I know there's a lot of people that can relate to this. You got into the payout stage, you're like, I'm gonna build this big buffer and keep this account forever. And it just doesn't really work. And remember why you're using prop firms. You're using prop firms to gain capital to take you to your live account. So remember, do not, if the money's there, lock in the money. That's a recommendation I give most people. Get the max payout if you can. If not, just get whatever you can for the moment. All right, now let's get into daily loss limits that you should have for your account. I'm a really big advocate for daily loss limits. If you don't know what a daily loss limit or a DLL, a daily loss limit is how much you can lose in a day before you get locked out of your account. This is a feature that a lot of prop firms and live account brokers offer if you go set it up. In my opinion, your daily loss limit should be about 2 to 2.5% max of your account. Now, if you're in a prop firm, it can be about 1% as well, 1 to 1.5% of the account. So if you hit 2 daily loss limits in a row, it locks you out. Now you can adjust that, but I recommend every single person to set a daily loss limit, because the daily loss limit will prevent you from tilting and losing weeks of work over just one bad day. So a lot of times when you hit your daily loss limit, it's not, if you come back the next day, a lot of times you make that back. When you're back calm, cool, collected, it's a whole different ball game. On a 150K account, I like to keep it around a minus $2,000 loss limit. On a 100K, I like to keep it around minus 1,000 loss limit. This is of course on prop firm funded accounts. And again, just $500 on the 50Ks. So again, it should give you about 2 to 3 days that you hit in those, and then you finally lose that account. And hopefully based on your system, you're not gonna hit 3 daily loss limits in a things like daily loss limits and stop losses are pretty much your seatbelt into trading. You're not gonna drive around without a seatbelt. I know some of you guys are gonna troll and say, yes, I do. But you know, when you finally crash, you're gonna wish you had them on. So make sure you are. Lastly, now let's talk about risk reward and what risk rewards to aim for. And in my opinion, this is very dependent on your strategy. If you have a low win rate strategy, you need to have a 2R or better risk reward. If you have a medium win rate strategy, like let's say you have a strategy that's around 50 to 70%, aim for a 1.5R or better. If you have a strategy that's 70 to 85%, you have a scalping, this is more like a scalping strategy, a 1R works. And if you have a strategy that's 50% or worse, so 50 to 10% we'll say, You need to have 2 hour minimum, if not even more. Like I know people that have a 40% win rate, but they have like a 3-4 hour, even 25% win rates, and they have 6 hours and they still make money. You need to find a balance on what your strategy is, and if you don't keep data and you don't know what your strategy you're kind of trading, you don't know. Now they're all fine strategy. I find myself more on this range here, where a medium risk reward, medium win rate. I find that works really well with prop firms. I feel like having a super low win rate with prop firms can not be as good, just because if you hit 3-4 losses in a row and then you hit your max loss, you lose that account. So you kind of want to avoid those really rough losing streaks. And 70-85% can also work if you have a really quick scalping strategies, 10 points in, 10 points out. If you think about something like the 1-minute scalping strategy that I thought in the other video, I think it was like 2 weeks ago now. So those are kind of risk reward. It will be adjusted based on your strategy. So again, this is not always black and white. It's very dependent. We all trade different strategies. We all have different styles. But what we do need to understand is all the risk management that we just went over. Now I'm gonna give you guys some sins that you should never be making if you wanna be respecting your risk, you wanna manage your risk properly. 1, never move your stop loss. Never move stop loss. Whether it's a mental stop loss or hard stop loss, you don't wanna just get rid of it. You don't wanna just bring it down to 30 points. Respect your stop loss. You can always enter a trade again. Do not sit through huge amounts of periods of drawdown. Never average down on losers, guys, especially if it was not part of your plans. This can work a couple times and it might work for you, but the days that it doesn't, it's kind of like the martingale strategy. You don't want to do that. Never enter a trade without a stop loss. This is probably like the worst. Just no stop loss, like everybody watching this, that's just ridiculous. And of course, never risk more than you can lose. If you're trading with money you gotta pay rent with, please stop. Then, can lose. So now I'm right there. So these are the sins that everybody should be following. And now risk management works. What doesn't work is when you stop respecting it. You actually have to follow, you actually have to listen, you have to trust the math, you have to be okay with being red some days, guys. Put that ego to the side and just follow the math. You'll be red some days, but you'll be green more and bigger on the better days. So I hope you guys enjoyed this video. If you did, subscribe, leave a like down below. If you want to join my mentorship one-on-one working with me, I will leave the first link down in the description, and I'll see you guys in the next video.